welcome to FML Fund My Life, a podcast brought to you by MyWallSt. And welcome to Stocktober. So if you follow MyWallSt on socials, you'll notice they've basically been taken over by a campaign we've nicknamed Stocktober. Throughout the month of October, we've pitched a stock a day in a 60-second video. And Emma has compared this campaign to a mini MBA in your pocket, or the Duolingo of stocks, which didn't really catch on that well.
No.
The benefit the viewer gets is that they can learn about the most important components of a business in under a minute. And more importantly, for us investors out there, they get a quick snapshot of what we think of the stock from an investment perspective. So if you haven't checked out those videos, I'd highly recommend taking a few minutes out of your day and head on over to MyWallSt's TikTok, YouTube, Twitter, or Instagram account, basically your favorite platform, and have a look at the videos. So if you're interested in business, popular brands, stock investing, or tech companies, there are nuggets of information for everyone that will make you smarter in minutes. So back to FML. In this episode, we're going to talk a little about some of the stocks we've already pitched, just in case you prefer listening to podcasts than watching videos. But before we get into that, how's your week been, Anne-Marie? For a casual chat.
It's in the notes, so we have to do it. How was my week? My week was pretty good. I was in Spain last week in Malaga for a nice little week off.
Lovely.
It's warm. It's good, yeah. And then kind of in cultural news, we are in a very big week of music right now. Lots of big releases. Very excited about. We've had a 1975 album, Taylor Swift album, Carly Rae Jepsen album, and a Beyonce album all in kind of last couple weeks. So I've been listening to lots of new music. It's been great.
Yeah, especially I think the Taylor Swift one has really just taken over like Twitter. I see everyone talking about it.
Yeah, she is kind of brilliant at self-promotion, isn't she?
Mm-hmm. And of course, Rihanna, the jokes are coming out now that it just shows the cost of having a child because she's gone back to work. It's like Rihanna going back to work proves that how expensive it is to have a child nowadays. You know, the rising cost of living and everything. I know.
Is she putting on an album or is it just a tour? Do we know?
Oh, I thought it was an album and a tour.
I don't know. I don't know if I know that the tour has been confirmed, but I think people are just suspicious that an album is coming. But it's been a while. I think it's been 5 or 6 years since she's put anything out.
Yeah, and just to circle back,
anyway.
So you were remote working in Spain, weren't you? Like for a few days.
Yeah, just for like 2 half days. I was working from there.
Yeah, and how did you find it? Because that's kind of like my thing, I guess.
Yeah,
I'm not working abroad.
It is. Yeah, working from a much warmer climate. It was fine, except the Airbnb that I was staying in Malaga City was like right in the center of the historic quarter, which was great in terms of like being able to walk around and see everything. However, what we didn't realize was that the apartment was next door to a club, like quite literally, like the next door was a club, and so there was music pumping until about 3:30 every morning.
Oh my god!
So that could have been better.
And I think you think Malaga will be quiet this time of year, like for holidaymakers, because it's October.
Yeah, to be fair, it was filled with like the elderly. They were there, for a bit of mild sun.
In
but
the club?
Also, clubs, no, they were not in the club, but they were like on the streets, like so it was pumping. So there is a club that is still going in Malaga apparently in October.
Yeah, and speaking of remote working, I've actually moved back to Ireland from Lisbon, so I was a good few months in Lisbon, and now I'm back in Ireland in the lovely weather. Currently down in Waterville in County Kerry, where it hasn't stopped raining. Honestly, like the west is so bad in Ireland. It's dark. We usually come here in the summer, and the village is very busy. There's loads of holidaymakers down. I guess college people are back for the summer, but this time of year it's so quiet. And with the bad weather, we're like, what do we do? We're going for a walk and just getting like lashed on like 2 minutes later.
Yeah. But I once stayed in Waterville like on a road trip when we were in like COVID times when we were told not to leave the country. Me and my friends went on like an Irish road trip and we stayed in Waterville in like it was a hostel, but it had become a hostel because of COVID, where it was being used as like a Gaeltacht, and they had converted the rooms and made it into a hostel, and we were the only people staying in that hostel. No one else was there, and it was a very surreal experience. We were like out a good bit away out of Waterville itself. It was very quiet and dark and cold.
Yeah,
and it was July.
It's a really nice part of the country, but it just gets like really bad weather, doesn't it?
Yeah,
that's mad that you've been here. I didn't think you'd know it.
Yeah, no, I've definitely been. I'm sure I have photos. Definitely ate a very good chicken sandwich in a pub there. All the highlights.
Of course.
Yeah.
Okay, so that's enough about our lives. I know you want to hear about the stock. So let's talk first about Lululemon, which is a stock that we have talked about a lot, I know, but it's one of, I think it was the first stock we pitched in Stocktober, if I'm not mistaken, and I should know because I'm a project manager. But yeah, what do you think? You wrote this script, Anne-Marie, on Lululemon stock.
Yeah.
And one of my favorite bits was that you made a reference to the ABC pants.
Yeah.
How like the company has kind of got attracted more male consumers because they've made these trousers called the ABC pants. But yeah, tell everyone what that stands for.
Yeah, it's the ABC pants, the anti-ball crushing pants, which is they're apparently a huge thing. Not only for like people doing like yoga and Pilates, but even they have a form of them that are meant to look like slacks. And so like people who are like teachers, office workers, they've just been buying up these pants to wear every day. They're apparently super comfortable, very like, you know, semi-formal looking, so you can kind of get away with it. And they're really, really popular. And I think it was kind of a testament to, for a long time, people were always like, all Lululemon makes is yoga pants, and those yoga pants are directed at women, and yoga pants really were such a trend kind of in the 2010s. And I think people thought that the company was going to be quite short-lived, and they were ignoring kind of the fact that like the reason that Lululemon was so successful in the yoga pant industry is because they were known for high quality. They were known for kind of having this premium brand. And so it's been really nice to be able to see them flex that muscle and say, hey, we know how to make premium products. So if, you know, yoga pants do fall out of favor, we can make alternatives that have that same high quality and people will like them. So that's kind of like one of my favorite facts about them, is it's always nice to see a company that you're like, okay, they're doing really well in this vertical, but can these same characteristics be applied to another? So yeah, that's kind of one of my favorite facts about them. I think my second favorite fact about Lululemon is they've been one of these companies that has succeeded despite the decline of brick and mortar retail. You know, everyone is always just ordering stuff online, but Lululemon is a completely vertically integrated company, meaning that they control every aspect of the way the brand appears, from their manufacturing all the way down to the stores. So they own the stores themselves. They're not renting them from anybody else. And that gives them really great flexibility and customization, because it means that each store manager is allowed to make the store, you know, themed in any way that they want. And that's something Lululemon really encourages, because they want the stores to be an experience. They want you to go in and try out a bunch of different options. They want you to talk to employees and get recommendations. And so just a testament to that is every quarter, I believe the company gives their store manager something like $20,000 or $25,000 to just revamp the store and do anything they want with it. And I remember learning about this and then going to the Lululemon store in Denver, and the one in downtown was themed like camping, and they had one of those mini Airstream trailers in the store itself.
That's so good.
And they had like moved their cash registers into it. And it was just kind of like an experience thing of like, oh, you know, it's the winter time. That doesn't mean, you know, the outdoors are closed, which is kind of a theme that they adapted because the store was in Colorado, where people do continue to like, it's very kind of outdoorsy state. People, you know, love to go skiing and hiking and all that, even in the wintertime. So it's very interesting to see that adaptability and see them create an environment which consumers still go into the store and they then spend more because they, you know, are in this environment that encourages them to do so. Yeah,
and that's very interesting. They're putting in so much money and effort into making their stores like an attraction, as you said, because like online shopping has become like massive. So like, you know, they could have easily been like, no, let's just make our website really good, or let's just put loads of money into like influencer marketing. But like, it is nice that, you know, people are going back a little bit. And remember, we talked about that before, like, you know, trends are going back in time. And I think there is a market where people are going to want to go, no, I want to go out and I want to experience things. And if their store is more like going to an event or an experience, that's really cool. But yeah, it is a big shift.
Yeah. I think the premium branding is kind of allowing them to have a bit more organic growth, because you really do hear a lot of word of mouth about Lululemon. People are like, have you tried these pants? They're really incredible.
Yeah. And they're so like popular with women. Remember, like all the way back in episode 2 of FML, we did one on the Becky ETF. The episode's called Becky with the Good Fund, if you want to go back and listen to it. But Lululemon was a stock that we put in that ETF because like it is so popular with these, you know, class of women who have a lot of disposable income, I guess you'd call it, and they do spend money in Lululemon. So it fits into that category very well as well.
Yeah, I also think just in terms of as a stock, it's quite an interesting stock to go back and look at, because I know Emmett has spoken about it several times, that when he was initially pitched Lululemon, I think by Rory, and I think it entered the shortlist in like 2016. It's been in MyWallSt for a really long time. Emmett said that he thought it was such a ridiculous premise. He thought it was a really ridiculous company. He couldn't understand how a company of that size, very small at the beginning, it's from Canada. He couldn't understand how like it was at all a reasonable investment when it was going to go up against Nike and Under Armour and Adidas, you know, really established brands. And I think that, that come on,
we won't go into it. We won't go into Adidas.
And I think he was kind of like, oh, this is so ridiculous. And I think the argument that Rory uses, like, there's a gap in the market. There is a sportswear gap in terms of like no one is appealing to women who do not want to be high performing athletes.
Yeah,
you know,
but want to be comfy.
But want to be comfy, but still want to, you know, be able to go out and do yoga and Pilates, but they don't want to be told they need to be running a marathon. And like he was right, because that is a gap that Lululemon has basically filled, and now it has all the other massive sportwear companies chasing them. Nike and Under Armour have both now tried to pivot towards more women's wear. So it's kind of a great lesson in terms of sometimes really great investments can be in this blind spot for the majority of the market, because I think it was a company really focused on women, and I think that sometimes meant that investors, I don't know, I think a lot of kind of institutional investors aren't normally looking for companies like that. So it's a kind of nice success story.
Yeah. And I know we're in a very harsh economic climate right now, but how is the business and the stock doing currently?
It's actually, there's this big trend. I wrote about this last week. So if you kind of want a more kind of concrete write up with some facts and figures, there's an article I wrote last week called "How to Skip the Bullwhip," because we're in this what's called a bullwhip economy right now, which basically means we're suffering the impact of companies over ordering, because during the pandemic people were spending a lot more money, particularly on clothing, but particularly comfy clothing. And so it meant that a lot of clothing brands pivoted really quickly and ordered in excess of things like leggings, pajama bottoms, sweatpants. And now all that merchandise is only just beginning to come in, because we obviously had a number of supply chain issues. You know, boats were delayed coming into America, boats were delayed trying to get into China. And so now all these vendors have excess merchandise. Nike has a tremendous amount. It's like billions of dollars of merchandise that's now sitting and waiting on shelves. Lululemon is actually quite an interesting company because they've been somewhat able to jump this hurdle. The first reason is because their sales are just absolutely phenomenal. I think their last quarter was like sales were up 25 or 30%, something like that. So revenue has continued to grow even as macroeconomic conditions have worsened. That's kind of a testament to their premium brand. We tend to see high value brands, designer brands do really well sometimes during recession, because recession often impacts high earners less, obviously, than those within lower classes. But also Lululemon kind of did the supply chain. They kind of tried to defy it by, they just decided they were going to spend more to bring the merchandise in quicker. So last year they had an issue of they were running out of some of their best selling items and they couldn't sell them because they just didn't have them to sell. And they were saying, God, we're leaving all this potential revenue on the table. How are we going to fight this? So they said, right, we're just going to spend more and fly the merchandise in from China rather than allowing it to go on boats, which meant now that Lululemon has been better at just staying on top of like, oh, how much do we need to be ordering, because they're getting their merchandise much quicker. So there's not this massive delay. Whereas Nike is waiting for boats to come in, which sometimes now means they're waiting 3, 4, 5 months. Lululemon is saying, no. We're going to order. We're going to pick the stuff up that's coming into the United States now, so we know how we can sell it. So that has meant that they actually don't have this excess merchandise problem that a lot of their contemporaries do. That being said, stock is still down kind of the same way the rest of the market is down. It's down like in 30-35% range, even though it's continued to perform. Revenue is doing well, a little bit of margin pressure, but not too much. Very successful business, kind of firing on all ends. A bit costly. Stock price is a bit expensive for a clothing brand, but its growth, I think, keeps people's attention on it.
Great. Okay. Very nice summary there. Okay, so let's move on to stock number 2, which is Manchester United. And this is one of the like stocks that did, or stock pitches that did really well for us on socials. And I do think it's because it's not one that we like frequently talk about on MyWallSt. It's not in our short list. We don't usually talk about like sports stocks, definitely not soccer stocks or anything like that. So I think it was like our followers were like, oh, this is something that I haven't heard MyWallSt analysts talk about before. And I'm not a massive soccer fan. Are you, Emery?
No, not really. I kind of follow like the World Cup and stuff like that, like national teams maybe, but I wouldn't be checking out the Premier League all that often.
Yeah, so you might not have as much to say about Manchester United, but I didn't even know you could actually invest in this company before doing Stocktober.
Yeah, I think they IPO'd in like 2014 or 15 or something like that. They are the only Premier League team I think that's floated.
Yeah, but like it is kind of like an interesting idea, I suppose, like to be able to invest in your favorite sports team. I'd say a lot of people invest in it for different reasons other than just like, I hope this stock makes money, you know, which is like the normal one. Yeah. But what do you think about it as an investment?
Yeah, you're kind of correct that I suppose if you're going to invest in Manchester United, it's maybe an investment you make for the love of the game, as they'd say, for the love of the team. I think if you're a Manchester United fan, you want to maybe put, I don't know, €100 in and just hold on to it to say, hey, I'm a tiny, tiny, tiny little fractional owner of Manchester United. I think that's okay. In terms of like, is it a stock that aligns with or has the characteristics of a stock that goes on the short list? Like, no, not at all. It's inconsistent, and that's just down to like the way that Manchester United has to do business. So they obviously are generating money from brand deals and merchandise deals and being able to sell their image in that type of way. And that actually intrinsically means that their ability to make money is tied to how well the team is doing. So, you know, if Manchester United is winning the Premier League and wins the Champions League, obviously that means that they will make a lot of money because people want to put Manchester United on cereal boxes and on t-shirts and stuff like that because they'll be popular. Last couple of years, Manchester United actually hasn't done all that well in terms of performing on kind of the big international stages. And that's been unfortunate because Manchester United has, like, I think the most expensive team in the Premier League in terms of signing players, and that, you know, there's a definite disconnect between, they have Cristiano Ronaldo, and yet they've so far this year not done very well. So, it's not an investment that I think would ever, line up in any way with like Horizon or MyWallSt or anything like that. It really is only something you should consider if you really love the team. And then you need to think of it of, I'm doing this because I want the stock certificate that says I own Manchester United, you know?
Yeah. So is it a no from Emery?
Yeah.
Would it be a no from you?
Yeah, it would be a no. And like, I think it's funny because there are other like sports teams that they're not publicly listed, but you can buy shares of. So a good example is the Green Bay Packers, which is an NFL team in the United States, and they are publicly owned. They're owned by the people of Green Bay, and they sell stock every couple of years. You get to buy it. It never goes up in value. The stock is always worth the same amount, and the team sells excess shares when they need a little bit of extra money. But the reason fans are happy to do it is because Green Bay, it's a city in Wisconsin, city, strong word. But when you compare Green Bay to every other city in the United States that happens to host an NFL team, it's really small. It doesn't have the foot traffic or the population that other cities that happen to have NFL teams do, which means it's the reason the people of Green Bay are able to keep the team there is because they're willing to buy stock in it and are willing to monetarily support it in that way. And I think that's really nice. But I think the people who buy the shares have that understanding where they're like, no, I love Green Bay. I want them to stay here. So I will financially support them. And so like, I almost feel like Manchester United, you should think about it in the same way where you're just thinking about you're financially supporting them. It's not exactly an investment. And
you did a bit of digging and you found that LAFC is a women's team that's recently launched on the stock market, I'm guessing?
No, it's not publicly traded. It's just it's a new women's team that is part of what is the American League called? Can't remember. But it was recently launched last year, and it's the Los Angeles team. And they're like owned by virtually like every famous woman you've ever heard of put money into this team to get it off the ground. So Beyonce? It's like Natalie Beyonce, like Natalie Portman, Jessica Chastain owns some of them. It's just like their board is just heavy on celebrities. Like Charlize Theron owns part of it. Like Jennifer Gardner owns some of them. Like Reese Witherspoon, because they all live in LA, and I think they were all like, women's soccer is becoming quite popular in the United States, and I think they were all like, why don't we have a team in Los Angeles? We'll just make one. So it's nice to see. I think again, it's just a reflection of if you want to invest in sports, sometimes it has to be a passion project.
Cool. Okay, well, let's move on then to a completely different stock. NIO is our third one we're going to talk about, who is Tesla's biggest competitor in the EV market. So it's based out of China which is a fast growing EV sector, I guess. And so, yeah, what do you think about this as an investment?
Neo is a difficult company because it's in a fast growing area, which is electric vehicles, and it's in a country that's very focused on encouraging people to buy electric vehicles. There's really lucrative tax credits in the region. 30% of new cars sold in China last year were electric. So obviously, you have this market that's moving in their favor. The issue is that like every other car manufacturer is aware that China is a hot EV market. So it means they're all pouring resources and time and manufacturing into there. So lots and lots and lots of competition. Neo is very much reminiscent of kind of Tesla maybe 5 or 6 years ago, where everyone is saying, right, this is a good concept, this vehicle works, but oh my God, are they having production issues? Which, I mean, this is something that we've talked about repeatedly on the Stock Club podcast. I think we've done 3 episodes on the difficulties of getting EVs off the ground. And it's like manufacturing cars is a horrible industry to be in. It is so low margin. It is so difficult. Like the likelihood of you being able to launch a new car and not go bankrupt is very, very, very low. It's so hard. And so Neo is far riskier than maybe picking up stock in an established car company that happens to have an EV branch, Ford, General Motors, someone like that, or even Tesla. Like Tesla is just more time tested, proven at this point. Like they have some of their manufacturing off the ground. You just feel a bit safer knowing, right, they're going to be able to deliver hundreds of thousands of vehicles. Neo is still in like the tens of thousands of vehicles spot right now. And they don't seem to be as kind of pushed in the tech side of things as Tesla would be. So, like Tesla has this insane valuation, and big Tesla heads try and say, oh, it's justified because they're going to sell car insurance and they're going to sell autonomous taxis and they're going to sell all this software that means that people will be paying Tesla month over month after they buy the car. I don't see Neo as having that kind of same ambitions. I think they, like every other car manufacturer, saying, oh, we will get to autonomous driving, but I don't see them, pushing as much to get into the software end of things, the recurring revenue end of things. So it's just a risky investment, and I think they will probably have a very difficult next couple of quarters as they try and prove themselves against this really tough macroeconomic environment. So one to keep an eye on. It's definitely in an interesting market. It's it's a bit too risky for me at the minute.
Yeah, so this would be high risk, high reward. This would be the top of the pyramid if you've listened to our stock building portfolio episode, for sure. We've we're kind of talking about all the risky ones so far. Lemon is really the best one so far, but it's good because we've done 30 in Stocktober, so like watch the other ones. But it's important to like pinpoint these differences, because I think a lot of people would be like, oh yeah, Neo is definitely gonna make it, but it's important to like note the risks, and it's not at the same level as Tesla at all, really, is it?
No. No, not in terms of like manufacturing, production, deliveries, nothing.
So it's a no so far for Anne-Marie and Neo, guys. But up next then we have Olaplex, which I'm very excited to get to, because this is actually a company that I know a lot about for once. One of my favorite brands. Saved my hair because I keep dyeing it different colors. And then it's also in the Becky ETF because it's kind of popular with this woman who has disposable income, so it fits into that kind of narrative as well nicely. But what do you think about Olaplex? Because they've been in the news, like, well, not recent enough. It was like I think 6 months ago now, wasn't it, that big scandal came out that it caused infertility in rats, and everyone was kind of scared about it. But it's not, the stock isn't doing that well lately, is it?
No, so they had earnings come out last week, I believe, end of last week, Friday-ish. It was bad earnings. It was quite bad. The stock is dropped in one day, dropped 50%, which, is the Olaplex is a small company. It's a small cap business. That obviously means it's more volatile. So you could see massive drops like that. It's very, I think that'd be very shocking to someone who's maybe used to holding large cap businesses, Apple, Microsoft, things like that. If Apple was to lose 50% in a single day, like something horrible has gone on. In Olaplex's case, it was just management was changing guidance downward, basically saying, oh, we're not going to meet the growth that we set out for ourselves. And also, interestingly, Olaplex is also dealing with issues that I mentioned earlier, in terms of they have a huge amount of excess merchandise. They ordered too much stuff during the pandemic, thinking that the demand that they were seeing while everyone was stuck at home is going to continue. That demand is not there. So now the company has a tremendous amount of product sitting around, and I don't know enough about Olaplex to say, does it expire? But
I don't think so. No.
it's just a thing of like, you don't want to say, oh, this shampoo has been sitting in this bottle for a year. You know, you want to move that product. You don't want it to be sitting on the shelf aging. Also, it costs money to store a product. I think that's something we forget about a lot, is shelf space, storage, warehousing. All of that costs a lot of money. If you have to get excess warehouse space, it's going to cost you tens of millions of dollars, if not hundreds of millions of dollars. So it's just stuck between a rock and a hard place. Sales are declining while also having excess merchandise is not where you want to be. But it's also not a story that's unique to Olaplex. It's something that's happening kind of across the market. A lot of stock. It's far, far rarer for a stock to not be having these issues than for them to be having them. So I guess you can take some comfort in that. But yeah, hard time for the company.
Yeah, I mean, like, and recently enough, they've got a massive competitor in this brand called K18, and everyone on TikTok is saying it's better than Olaplex. But one thing I will say, hairdressers are still recommending Olaplex above anything else. And like, you know, and that's interesting because it's not like it's one of the products in the hair salon that they get money back for recommending it. Like, they don't, but they just they still say Olaplex. So yeah, I think it's definitely one to watch. And I remember even when they had the bad earnings report the other week, Emmett slacked me because he just knows I love Olaplex, and he was like, stock's down 50%, really bad earnings report. And I was like, damn, I just told everyone on LinkedIn that this was my favorite Stocktober pitch. And he goes, well, look, like, in 10 to 15 years, you know. So yeah, it's kind of a one, like, if you really believe in Olaplex, but definitely one to keep on watching their financial statements as they come out, because as you can see, last week it was very bad for the stock. But yeah,
I suppose it's just a risky, kind of one of those
another risky brand facing stock, basically.
Yeah, and I think we're seeing a lot of the issues that we proposed when we looked at Olaplex initially. I know Rory has made a pitch on Olaplex. I know we've talked about it on the podcast. One of the things that the company just has is it's operating in a very small vertical. Like, it has these products and they're very famous, but it's just, you know, their serums, their hair care stuff, their shampoos, their conditioners. Whereas I think oftentimes manufacturers of shampoo and conditioner are in a lot of other areas. Like, they might be making cosmetics, they might be making body wash, might be making soap, you know, blah, blah, blah. And they tend to be in like parts of massive conglomerates. You know, Unilever manufactures like a huge amount of these types of products. So it's just kind of a reminder of, like, in order for a small business to succeed in the face of these massive companies, your product has to be really, really special and has to have, you know, a massive moat that no one else can beat. You know, it has to be protected by some sort of patent or something like that. And so it seems like Olaplex is going to be challenged by this now if there is a competitor that is becoming as viral on social media. So it'll be interesting to see over the next probably year if it's going to stand the test of time.
For sure. Okay, so let's go on and talk about our last stock, which is the New York Times, another consumer product stock. I don't know much about the New York Times other than, like, it's just so famous. I always hear about it in like movies and books and stuff. Never actually go on and read anything by the New York Times, mostly because it's paid. But I guess, but since they bought Wordle, I do go on and play that now and again. That's really all I know about New York Times.
Yeah, I think that was the idea when they bought Wordle, is they were like, we'll get some young people's eyes on us and see, can we encourage them to get a subscription. I really like the New York Times. I would say I'm a fan. I have a subscription to the New York Times. I have a subscription to the New York Times Cooking, which is super great, actually. If you are in any way a cooker, a baker, it's their app and their website is great. They have, like, any recipe you need is on there, and they're always really, like, well vetted, and they've been gone over, and, you know, there's a nice little community on there of people. Like, every recipe I go on has, like, all these great comments of people being like, oh, I adjusted this to fix this, or I, you know, really, like, you know. Anyway, so from like
how much is the cooking one?
I think it's like $50 for the year. It's not much. Okay. It might be even, like, they tend to run specials as well, like around Christmas, Black Friday, and I think you can get it for even less than that. And also if you're like a young person, if you're in university, you can get access to the New York Times for basically nothing. Like, I think it's like $1 a month or something like that. Like, very, very affordable. Rory is also a huge fan of the New York Times. I think when he put the stock in, I think it was very much him wanting to put a company in that he felt good about, that he felt was like pushing for the common good, which I think the New York Times is. The only thing is that, like, it's wholly dependent upon people viewing it as being valuable and paying for it. You know, it's like Netflix. It needs people to buy the subscription. They make a lot of money actually off of selling physical newspapers. That's a much more profitable way for them to do it, but obviously that's dying at this point. It's kind of a lost art. And so, yeah, you're hoping that young people will continue to value journalism and want to pay for it, because the alternative to that is that all journalism is paid for by advertising, which isn't like a perfect system, because inherently those advertisers can have influence on what the newspaper is allowed to write. And that, you don't want that. You want your newspaper to be functioning completely independent of any type of bias.
That's very
and
true,
so
you don't want to full of ads either.
Yeah, because it's just distracting. Like, it really does ruin your user experience. And so I think we are kind of going to see a generational question here of, are people going to continue to value and pay for journalism? And I think, like, just from my experience with like people my age, a little bit younger, there is this kind of interesting culture where people are very willing to pay artists and creators. I think that they're very much, they value the individual. They value someone who's like putting their heart and soul into something, and they want to pay for that. But at the same time, young people seem very in opposition to paying corporations. And so it's kind of interesting to see where the New York Times is going to fall on that line. Are they big enough that they're considered a corporation, or are they have enough kind of individuals with individual followings, and people saying, no, I value this. I want their input. I want their opinion. I will pay for it. So yeah, but also just in terms of the business, the New York Times is very good at making acquisitions, and they acquired Wordle, as we were speaking about earlier. I think that was a fun little acquisition for them. They didn't pay very much for it. I think they only paid like $1 million or something like that. And it fits really well with like the New York Times crossword is really popular. That's a subscription service that some people have. And I think Wordle, just in terms of like how the game functions, it's slotted in really well with those offerings. More interesting was the New York Times bought The Athletic, which is a really cool sports-focused online newspaper, which basically encourages local reporting. So rather than trying to get this like one national like sports outlet, they said, no, like people care about their own sports teams, their local sports teams. So how do we get good coverage on that? And they said, well, we'll just hire the best local sports people from all across the United States, who maybe, you have one writer and all he does is write about the Green Bay Packers, but that's totally fine, because it means that people who love the Green Bay Packers will pay to view that content. So The Athletic is like this really incredible, diverse, thoughtful sports outlet, and people really like it. And so it was kind of a great acquisition for the New York Times, fit into their ethos really, really well. So yeah, I think the product is incredible. It's just, will it stay relevant?
Yeah, I think you've kind of sold me on the New York Times one. I think I definitely, that'd probably be my second favorite one in the last 5. I think definitely Lululemon, and then New York Times. The other ones are a bit too risky for me.
Yeah, and I'd say that like the New York Times does definitely have a hint of risk to it, because it is that it's a long-term cultural shift type thing that, you'd be investing, and then you say, okay, we'll see how we are in 20 years. We'll see what young people think. We'll see, are people still willing to pay for this? So, yeah.
Okay. So that was all our stock pitches. And yeah, again, if you want to see the other 25, make sure to check out MyWallSt socials for the rest of the month, because they're going to be finished up at the end of October. So having said that, now it is our Girl Boss of the Week. So who is it this week, Anne-Marie?
Girl Boss of the Week.
Well, this is like a little bit of a throwback to, do you remember when we did the second part of the NFTs conversation? Yeah. And our Girl Boss of the Week that week was like Reese Witherspoon and a bunch of other celebrities who I was very frustrated because they were plugging NFTs without disclosing whether or not they owned NFTs from the collection. And I was going, how is this legal? Because if you owned a stock and then you went online and plugged a stock and you were really famous and had this huge following, it would be illegal. You would be fined. Yeah. Well, in that kind of same vein, our Girl Boss of the Week this week is Kim Kardashian, because at the beginning of the month, the SEC fined Kim Kardashian $1.26 million because she had taken a big fee basically to promote a cryptocurrency on Instagram, and she didn't properly disclose it. And she was paid $250,000 to publish about it on Instagram, and basically didn't effectively, in the eyes of the SEC, disclose, that she was being paid to promote this, that she like hadn't looked at the risk profile of the cryptocurrency at all, that it was, considered a risky investment, any of that. So I love this, because I think that the SEC needs to be doing more of this, and I'm very excited in the next year to hopefully see more celebrities get fined for this type of behavior because they think it's really unacceptable and it takes advantage of people. So yeah.
Yeah, I can't believe she really did that, because I thought she would have like know the rules so well for socials because of how many promotions they do. Like, you think they'd be like, you know, like that hashtag ad promoted would just be like ingrained into them. But yeah, she's just been in a lot of controversy lately. Like them, like they just seem to be coming out like every week. But again, I remember seeing a meme like, this is chunk change to her. Like, she's a billionaire, she has a private jet. But yeah, still. It's nice to see though that like they are getting stricter with things like this, because, you know, she has massive influence over people. Okay.
Yeah, definitely.
So that's a wrap. That's a wrap for this episode. Thanks so much for listening.
Oh, hang on. I don't have my script open. 2 seconds now. If you enjoyed this episode, tune back in 2 weeks' time.
And if you want to follow us on socials and watch the Stocktober pitches, please, you can find us on Instagram at Fun My Life Podcast, on Twitter at MyWallSt HQ, and on TikTok at MyWallSt, and on our new account, which isn't really new, dedicated to the podcast, at Anne-Marie and Nicole FML.
It's also worth saying that Emmett recently joined TikTok. He's very excited.
Yes.
And I think, is he at Emmett Savage?
He is. Yeah, he is.
Yeah. So go and watch Emmett. You can see he's doing his own Stocktober thing right now. He's like dueling stocks.
Yeah, he's
off one another or something like that. Yeah. Anyway, but so there you go. Loads of content on all sorts of channels. And finally, if you are ready to start your investing journey and are looking for resources, check out MyWallSt's Getting Started podcast anywhere you listen to podcasts, or download the MyWallSt Learn app. Both are linked below. If you want access to our list of stocks handpicked by our analysts and lots of other investing and finance content, download the MyWallSt app and create your free account today.
That's all from us. We hope you enjoyed listening.